Welcome to Petros Family Wealth. Today we're going to talk about 10 different questions I would ask if I were to interview a financial advisor to serve me and my family. Let's go ahead and dive in. So here's a list of 10 different questions I would ask if I was interviewing a financial advisor. And as we go through these, if you feel that you've gained some knowledge and some good ideas, please go ahead and like, subscribe, and hit that notification button so that we can continue to share some good ideas. First question that I would recommend is, are you a fiduciary? And so let's talk about what it means, both in the definition as well as some of the practical aspects. So a fiduciary definition is that you are legally obligated to act in somebody's best interest. And on one end, there are advisors that are 100% fiduciaries, and then on the other end, there are advisors that can't be a fiduciary as they are primarily commission-based advisors. On the practical level, a fiduciary has to get paid or compensated the same whether they recommend one strategy over another. And so generally that's in the form of either a flat rate fee of a certain dollar amount for a financial plan, whether it's 1 year or multiple years, or if it's based on hourly rates. The third one that's most common is based on a percentage of the assets that they manage. And that means that, again, whatever they recommend on the investments, their compensation does not change, and so they are not incentivized to recommend one thing over the other. Then you have folks in the middle that generally are in the larger firms out there where they can be either commission-based or fiduciary-based and fee-based. And it's good to ask which one do they typically recommend for their clients and then why. Because there might be certain situations where a commission-based advice might make the most sense, and then there's others where their fiduciary would make the most sense. And then on the commission-only basis, you typically see this in advisors that are associated with different insurance firms. And if you provide insurance advice and it's a commission-based insurance, then technically they can't be a fiduciary because they're incentivized to recommend more insurance, as an example. It's not to say that one is better than the other. It's really just making sure it's the right fit for you and your family as far as your comfort level, whether you want a fiduciary or a commission-based or somebody in between that can provide both. Second question I'd recommend asking is, what services do you provide? And a lot of times you can bucket these in different buckets. I'd say 4 of them. First one is investment management. Second one would be tax planning. And the third one would be estate planning. And then the fourth one would be protection, such as insurance, either life insurance, long-term care, disability insurance, and the like. As far as the investments go, they might be able to manage the investments for you and your family, and sometimes they might have an internal team that helps manage the investments for you and your family. Other times, the investment management, it may not necessarily be provided by them, but they do due diligence on a third-party manager that manages the investments, and they have a selection of options that they can use to determine what's the right fit for the client. And you typically see that with advisors that maybe are not focused solely on the investments. They're more focused on some of the plans and the planning aspect where they outsource some of their investments. The second service that I like to categorize is on the tax planning side. If you want to dive into the tax planning, it depends on what type of tax planning. Is it intra-year? Is it ongoing? Or is it long-term projections on the tax side of things? So for example, I might be able to have a financial plan that incorporates taxes over the multiple years. Another example would be, hey, if we contribute to a traditional 401k versus a Roth IRA, here's the net impacts one way or another. That's another form of just regular tax advice. And then the third is probably the higher level one, is where you go intra-year, where you incorporate dividends, gains and losses, certain pass-throughs, and then you can model in an intra-year tax strategy or intra-year tax plan and identify what the estimated payments might be. So that's at the higher level as far as the tax planning goes. And it's probably good to get some examples of each of these to make sure that that's the right fit and whether you want those services or not. The third question I would ask is, what is it like to be a client? What should I expect? Am I expecting a call every single month, once a year? Are we meeting once a year? Are we getting plans built out and updated once or twice a year? What would that look like? Is it also including that we should expect to be invited to certain client events, some educational events throughout the year? Are there newsletters that you publish? Is there content that's being published for you and your firm? What would that look like? And let them kind of explain what they expect as far as the services that they can provide, given the different asset levels or preferences that you might have. Fourth question I would ask is, what's your investment philosophy? And this one, again, is another open-ended question. And the range of possibilities is quite wide. Sometimes different financial advisors might have a preference more for growth or for conservativeness. And a lot of times it depends on the makeup of their clients. If a lot of their clients are in the older side and more retiree side, their investment philosophy might be, just in general, to try to protect wealth and focus on downside protection. Another advisor might have a lot of younger clients that are looking for growth, and then their focus is on the growth side of things and growing that wealth over time. You can also have preferences as far as whether we want to use active management, which we're taking the risk to either try to protect on the downside or try to outperform the markets, or if we do passive investing, where we're focusing on lower cost options and riding the general trend of the market with some tweaks and rebalancing along the way. So it's good to ask both from an aggressiveness standpoint to conservativeness, as well as their philosophy regarding how they try to implement that, either lower cost options or if there's some opportunities that they see and might be able to show of outperformance either on down markets or on the upside. Fifth question I would ask is, what are your qualifications and experience? So we have a video of different qualifications that you might see, so go ahead and click here if you want to dive in a little bit further on what different types of qualifications are out there and some of the common ones, and then what it entails to get those qualifications. And then as far as the experience goes, just asking, how long have you been in the business? As well as what were some of the previous careers that you might have had. We find a lot of times some advisors might start in the tax preparation side of things and then transition to a financial advisor. Other times somebody might be an attorney or an investment analyst at a firm and then transitioning to individual financial advice and investment advice. In both of those different situations, it kind of feeds into the philosophy and the style that they might have when they're serving you and your family. Sixth question that I would ask is, how do you get paid? And a lot of times this might be answered right after the first question regarding if they're a fiduciary or more of a commission-based advisor. But get an idea of how exactly. Is it quarterly? Is it billed from my account? Is it a monthly fee that's charged to my checking account if they are focused on flat rate advice and ongoing advice? Understanding how they get paid and helps determine and solidify that first question as far as how you're fiduciary. Along with that sixth question is number 7. What are my all-in costs? And a lot of times this can be informed, again, by previous questions. But all-in costs would include, for example, is there assets under management fee? Is there ongoing monthly expenses or monthly or annual planning fees? And then what are the types of investments that we use? So for example, somebody that might charge 1.25% of the assets under management could also potentially have somewhere in between 0.1% internal costs all the way up to 1.25% costs if they have active management as well as maybe a third-party manager that they use as well. So all-in costs and giving some examples would be very helpful for you and your family. And don't be afraid if an advisor is saying, well, it depends on the situation, because it certainly does. But I would expect if you're in the comprehensive financial planning realm that the all-in costs might be anywhere between 1.25% all the way up closer to the 1.7% of the assets under management. If you're looking solely for investment advice, that is definitely a lower cost option where they're helping rebalance in the investment selection, but maybe not providing, answering your question of, do I contribute to my traditional 401k or my Roth 401k? And those can get down pretty low, especially with some of the robo-advisors, as we call them, and sometimes charging down all the way down to the 0.25% with some internal fees, maybe an additional 0.25%. So your all-in costs for just an investment-focused portfolio, no financial advice or estate planning or tax planning, might be all the way down to the 0.5 level. Question number 8. This is a question where I specifically say, what do you have a clean U for? What does that mean? So every advisor has a record essentially when they get registered and have their ongoing designations renewed. And you can go to brokercheck.org to identify and put in the name and the firm that you might be working with or potentially working with, and identify if that individual or that team has some disclosures, what's called. And disclosures might be, for example, if somebody had a past bankruptcy, that would be on their U4 record, their brokercheck.org record. You can also identify if, for example, there were some other nastier situations out there. And then others might be, for example, if they get sued or settled with previous clients. With today's society being very litigious, I would not necessarily disqualify somebody if they have one or two or a couple items there on the U4, but it would be good to understand ahead of time so you can look at their record and then maybe bring those up as far as, well, what was your perspective? That's what I would use as far as an identifying some of the past behaviors, and particularly in the example of the bankruptcy, that might be the reason why they got into the financial advising, because they were in a really bad situation and they dug their way out of it, and that's their purpose in life, to help others try to avoid those situations. Number 9, can you show me some examples of the services that you provided? For example, if you provide investment advice, show me a model or an example of investment design that you've shared with other clients. If you do tax planning, can you show me an example of a tax scenario that you ran for a client? This will help to determine the granularity of the advice that they might provide and whether it's a good fit for you and your family. Number 10, what's your process for new clients? And what are the steps associated with each of those processes? Sometimes we see nowadays, especially on the advice-focused advisors, they might charge a financial planning fee up front in order to build out that financial plan. And then over the course of a series of meetings of the advice that they give, they charge for that service. Others, they might provide the discovery and recommendations meeting free. And then the investment costs, essentially, or the management of the investments, is where the costs come in. So again, entirely up to you as far as your preferences and what you would look for as far as the advice that you would like to receive for you and your family going forward. Hopefully you find that helpful, and best of luck in finding the right fit for you and your family. Thank you.